Bob, and this is political figure number one, and we are ready for a beautiful day today. Good morning, Mark. How are you today, buddy?
I'm pretty good. How are you?
Excellent, excellent. I was watching a little bit of news yesterday, saw that they're going after my boy Bob, and then we've also got they finally got those text messages on the WhatsApp from Hunter saying, "Hey, you know what? Just send a check to my dad's house. That's all you got to do." So they got
You
him
know,
finally.
he if he was a normal person, meaning Joe, he would be done. But he's got so much hubris that he's going to fight this. And it's Obama didn't want him, but he's like, "F you, I'm going to run anyway. This is my party now."
Yep.
So there's going to be a lot of infighting, man. So the Republicans really need to hold their stuff together because the Democrats are about to really just destroy each other. Chris
If they don't
Christie
get the
is a
country
friggin'
first.
fat slob, man. What is? Yeah, well, we'll see. We can't. Hunter wants money is all gone. Can't pay his alimony, but yet he takes his private jet to his alimony hearing. How about that?
Listen, man, I tell you the
All
beautiful
right.
part that I saw him put together yesterday. I don't know. Can you hear me?
Yeah, I hear you.
Okay, so check this out. So when they were putting this press conference together, so not only did that check come from the Chinese, but the deal with the Mexicans, he actually texted them, talked to them, said, "Hey, we got to come there," and then they fly down on Air Force Two to go to the meeting, and they're with a business partner of his to do business on Air Force Two that we paid for them to fly down there and do,
Wait,
and
so
have
what?
Secret Service to do.
They got business in Mexico now too?
Oh yeah, they got the IRS whistleblowers. They finally got all of it laid out and laid it out yesterday. It's ugly. It's ugly, and I'm telling you, if we don't stop changing, if we don't just take a breath for a minute and think about where we're going in this country, we're going to lose it. And
Well,
I,
people
and I
don't
don't
think
know
that.
that we're
That's the
not already
problem.
there.
No, people don't think. All right. Anyway, let's see what's going on in the markets. Look at this GameStop. I see there's some news now. GameStop tends to overreact whenever news comes out because the people that trade it don't know what they're doing. And you can see that on the chart. See how you get these like big moves and then you get this immediate reversal, big move down, immediate reversal. So it just shows that there's like an overreaction and a misinterpretation of the news. So anyway, the stock is, I assume, is going to be trading up pretty good this morning. Well, not up that much, 1846. Notice how we got back down to this support level here, which is, that's mislabeled. This is 1625.
We're on Reddit now, Stock Jobber OG. If anybody's on Reddit, you guys can follow us there.
Yeah, you guys got to spread the word, man.
We want to help the people in GameStop and AMC avoid things like this because he's right. This is a chart that nobody knows how to trade.
Yeah, I mean, you could see that. Like, there's this obviously, I mean, it goes without saying, there's a big move, and then there's this immediate reversal. There's a big move lower, and there's immediate reversal. But let's see. So, but this news might actually be kind of relevant. So, Ryan Cohen is the activist investor, and I guess he's becoming the CEO. So, this could end up in the long run being good news for the company because their old CEO kind of didn't really know what he was doing. Um, but that being said, I would look for some kind of reversal in the stock. If we got up to, I don't think I would do anything now, but if we got up to around here, this former peak, like let's call it 19, maybe 1925. So we're about 75 cents away. But that's where I would probably start looking for some kind of a reversal.
Excellent.
All right. So
That was a beautiful day yesterday, and that was a nice call on the SPY.
what did SPY end up doing anyway? I was
It actually reversed from 422.93. Quite quite a nice rebound.
yeah. It's still low. But it still is continuing its downtrend, right? Notice how
Yeah.
yesterday's open was lower than the prior day's open. And this morning, nothing's going to. The market, I don't see how this market doesn't continue to go lower because Look what's going on in the interest rates with interest rates. Look at that, up to 4.63%. We were at 4.65 this morning when I got up. I mean, again, let's look at this through the context of this is the inverse to the bond because like the main interest rate people talk about is the Fed funds rate, and that's the rate that the Fed sets, like when Powell and Janet Yellen do their thing or whatever. That's the rate that banks lend to each other at. And that doesn't change. It's a solid number. If you were to look at a chart of it, it would look just like a perfect staircase. But this is the 10-year Treasury index, which is tracks the yield of the bonds. So we got to look at it as though this is the chart of a bond as opposed to interest rates, because people don't trade interest rates directly. So if we invert this chart, doesn't it look like it's starting to go into like a panic type of selling mode?
Yeah, it does.
So this could move pretty quickly. All right. Hello, Brandy. Hello, Adam. Hello, Abby, Sean, Mr. Steven. This could by the way, Mr. Steven, Clifford has developed an affinity for that alligator head you got me. So he took it off my shelf and he was running around with it and completely freaked my wife out. She started like screaming. She was like, "What the hell is that?" It's like this little alligator head. It's like,
yeah.
But anyway, yeah, I don't see how the market doesn't go down with interest rates doing this. So let's look at, look at that. Oh, also too, adding to this inflation thing that I think is really starting to pick up again is natural gas could finally be breaking out of this range that it had been in for so long.
Let's go, baby.
Yeah, so I would assume this has something to do with the move up in oil, but we had this false breakout back here. But other than that, we've been in this range since June, and we could finally be breaking out to the upside here. So the false breakout, you can see that, or they used to call this a bull trap, or maybe they still do. Bull trap, false breakout. When you get a clear level of resistance, sometimes traders place what we call buy stop orders, which are buy orders above the market. So just say hypothetically it's trading at 275 and someone says, okay, I'm not going to do anything, but if it gets to 285, I'm going to buy it. So you might be saying to yourself, well, that sounds counterintuitive. Why don't you just buy it at 275 as opposed to a higher price? Well, the idea is if it exceeds the resistance level, it'll keep going. So you get these traders that put these buy stop orders above resistance. And if the contracts get up there, or stocks or whatever you're trading gets there, you trigger these orders and it makes the thing skyrocket. But if there's no follow through, if that's like the only thing that's going on is these buy stop orders, then you get a quick reversal like this coming right back. And a lot of times these false breakouts in and of themselves are good signals, are good contrarian signals. A lot of times when something has a false breakout, it's the beginning of a pretty big trend lower. So if you're trading breakouts and you get, it doesn't work out, don't go put your head in the sand. Say to yourself, all right, is it time for me to just take my small loss and get in this position on the other side? But anyway, this to me, at least right now, it doesn't look like a false breakout. I mean, these are 2 days with kind of a nice steady uptrend. So if you want to buy natural gas, you're not a futures traders, you can look at UNG, which is an ETF that tracks natural gas.
I've been buying little pieces of this every time it gets down to around 660.
Yeah, it doesn't track it perfectly, but that's because this is trades from 9:30 to 4 Eastern time, whereas natural gas is basically trades continuously all around the world. But if you want to get exposure, UNG is going to be a pretty good way to do it. You can also, if you're super bullish, there's the Boyle ETF, which is designed to move up twice as much as natural gas. So see how yesterday it was up to, this morning it's up like 3%, and natural gas is up like 1.2%. So this one uses leverage. So if it goes your way, it's a good thing, but you got to be careful because it could go against you and then you lose money twice as fast. But where am I here? But I don't know. To me, this kind of looks like a breakout. I think maybe if you want to be a little bit more conservative, check this out. Right, see where that top was back there.
Mm-hmm.
The top was there. Now, notice that this is exactly $3, and this is a really good illustration of how important psychology is in the markets. We're talking about the natural gas market, which is this huge market. It's all over the world, and it never stops. And there's people drilling, and there's ships, but yet somehow all these forces come together, and they make it stall out at exactly $3. It's not 308. It's not 297. It's $3, and this is because guess what? Natural gas is being traded by people, and people have these emotions. People like putting things in at nice round levels. I mean, everyone does it. I mean, big institutions do it, small retail traders do it. Humans just like these round numbers. So that's only 7 cents away. So there's a good chance it hits some resistance there. Now, if it does, and it looks like it's going to reverse, then you could check out the cold ETF, KOLD. This is designed to move in the opposite direction. So if natural gas starts to roll over, this is going to go up. But I don't think I would go long until it cleared this $3 level and looked like it was going to hold. So there's a good chance there's going to be some resistance there. But this is probably following along. I know people like argue is whether natural gas is correlated with oil, but I think it kind of is. So look at oil. Yeah. So now oil. This is what we want to look for sometimes if we're trying to anticipate another move higher. So this level was resistance. This is 90. Actually, let me put an exact number on there. All right, so it is 93. And notice how we got above it, and at least for today, and I know it's still early, but see how what was resistance has turned into support, at least for today. Today's low trade was 93.03. So things don't really go up in straight lines. They go up in like these staircase formation. So if this spends maybe 3 or 4 days consolidating up here, then there's a good chance we start to get another move higher. But it could end up just completely reversing like we saw in natural gas and be a false breakout. But I don't as of right now, I don't think excuse me, I don't think that's the case. But so let's just see if oil can hold above 93 for maybe 2 or 3 days, then that's probably going to mean oil is going to move ahead, which means a bunch of the energy stocks are going to move ahead. So here's our energy sector ETF. Yeah, look at the move this is making. So if this has got gas in it too, and this is all energy as opposed to just oil or natural gas. But anyway, it pretty much follows along with oil. So if oil starts to hold and looks like it's going to move forward, then you can look at a lot of the stocks in this ETF that will probably move forward too. You could buy the ETF. You could buy USO, which is an ETF that's designed to track oil, the United States Oil Fund, which again, it's like natural gas. It's not like an exact thing because this is only trades from what is it, 6.5 hours a day, and oil trades around the clock. But for our intents and purposes, if you want to get exposure to oil, this is more than adequate. And you can look at some of the oil companies like ExxonMobil. See, this is on the. I mean, look how close this follows oil, right? Just like oil looks like it's breaking resistance, this looks like it's breaking resistance too. But it makes sense because, right? What does ExxonMobil have a lot of? They got a lot of oil. So if the price of oil goes higher, the company becomes worth more money. So when you're trading these commodity-based stocks, you got to pay attention to the commodity. They trade a little bit differently than regular stocks do because they're going to have so much influence by the commodity that they track. I mean, you can still see that we still get this pretty clear levels, but it's a little bit of a different dynamic than just trading a regular stock. All right, so now let me just fix this. So let's go take a look at the S&P again. And it's like we've had this nasty sell-off, and there's really no signs of a rebound whatsoever. So the sentiment has gotten pretty negative, which is actually bullish for the market, because if people are overwhelmingly bearish, what do? They sell everything, and once they're done selling, the market runs out of sellers, and then the only way it can go is higher, or maybe it'll just stay flat. But let's just see here. Okay, so this just came out. All right, so now 41% of investors are bearish, and that's a little bit on the high side, and a very low amount are bullish. So this could probably put a little bit of a floor under the market, because think about it: if a lot of investors, or the vast majority of investors, are bearish, they go out and they sell their stocks, and then when they're done, there's no one left to sell, so the price can't get pushed down any lower. But I don't. That doesn't mean, though, I think in this situation it's going to come roaring back, because I think that the move in interest rates probably, at least for the time being, kind of trumps this. So maybe the selling will kind of like dissipate and slow down, but I don't know if new buyers are going to be coming in. It's almost like it's an uncharted territory, because we haven't really dealt with interest rates moving higher, or inflation, at least, and really no time in my entire career.
Well, Mark, we've never had a one party completely destroy the policy that made us independently wealthy. I mean, our economics and our oil policy is just a joke.
Yeah, it is pretty bad, man. It is pretty bad.
So it feeds to the rest of the economy, because petroleum isn't everything.
Yeah, dude. All right, so this here is the percentage of stocks that are above the 200-day moving average. I'm going to make this a line chart. All right. So think about it. Percentage of stocks above the 200-day moving average. So we're at a real low here. Only 35% are above, whereas 2 months ago, 60% were above. So this is a sign that people are really kind of selling hard, right? And this could be a sign of negative sentiment. Now, if we look here in December and here in March, the last two times it got this low, and then we go look at the market, and I'm going to go back to our candlestick charts. Those were each good times to buy. So here was December and here was March. But you didn't have the interest rate situation like we did, or like we do now. So despite the negative sentiment, I don't think we're going to see any kind of a significant rebound. But let's look at some of these things. Like I think S&P could get down to here, probably around here is the next stop. Let's call it 420. So that's only 6 points away. But then you start looking for the bounce, because you got
filled that little gap with the wick yesterday too.
Yeah, so we'll be oversold. We'll be at support, and we have very negative sentiment. So that sets us up for a move higher. Get rid of this here. All right, so let's look at the tech sector. This is the biggest sector. Remember, there is 11 sectors, and different ones are in the driver's seat at different times. Right now, I think probably financials are the most important thing to watch, but we'll get to those in a minute. This is a great chart to show you about how these levels are. The writer's strike is over. What do I think of WBD? Well, $11. What level is this here? 11. I mean, I don't like to get this too precise, but let's just say 1105. All right, so you see how this level here was support. Now we broke, so it was support here, and it was support here. So remember, you got people who were selling it here. The market's really going lower, and people kind of start to panic, and then it's just like we get this kind of aggressive selling. And then what happens? The thing blasts higher. So a lot of the people who sold are basically like, "Oh man, this sucks." You know, why did I sell? Now it's higher. If it gets back to my level, I'm going to buy my shares back. So you get remorseful sellers from over here placing buy orders from over here, right? And then what happens is the market's going lower because there's not enough buyers, and then all of a sudden it stops going lower. So some of the traders who want to buy start to say, "Hey, this thing isn't moving any lower. So therefore, there must be new buyers coming into the market. I better increase the amount I'm willing to pay. I better increase my bid." When you want to buy something, you say you bid for it. When you want to sell something, you offer it. But I got to increase my bid, and that starts a snowball effect, and people jump ahead of each other, and this is why we bounce off of support. But anyway, we broke the support, and now notice how what was support, at least as of yesterday and as of this morning, it's become resistance. So if we don't get above this resistance in the next few days and we stay below it, we consolidate, then I think the odds are that we probably start a new trend lower. We got above it yesterday a little bit, but considering what's going on with the interest rate situation, my guess is it probably doesn't rebound. But I don't really know enough about this stock personally. Well, I don't know if personally is the right word, but I don't know enough about the fundamentals, I guess. But just as a technician, that's what I'd be looking at here. So if you want to buy it, I'd probably wait to see if it clears 11.05. Maybe if it gets up to like 11.25, maybe you buy it. But I wouldn't buy it until it got above here. It's like we talked about before with the whole situation, which leads people to get to the false breakouts, to put in the buy stop orders. Is resistance is this large group of sellers. So if we get above the resistance, it tells us that those sellers are out of the way. They might have canceled their orders or they might have finished their orders, but either way, they've left the market. So anytime you pull a lot of supply out of a market, it sets the stage up for a move higher, because if people want to buy, all of a sudden there's no sellers around. Like right now, when you're at a resistance level, it's like, oh, all right, well, there are a lot of sellers here. But eventually, if the straw that breaks the camel's back comes on, like the last share gets sold, well, then if new buyers come into the market, it's like, wow, there's no sellers around. I got to go out and pay a premium. Just think about I like that, watching that show Storage Wars. And it's, people they outbid each other. One guy bids 100, the next guy bids 120, the next guy bids 130. It's like the same kind of a thing. All right. Now we were going to go look at the tech sector. I like the shows that have things that have to do with money, because it shows you how illogical people are when it comes to money.
Antique Roadshow is really cool too.
Which one? Oh yeah, Antiques Roadshow. Yeah, they always overestimate that, because sometimes it's like one of the few shows my wife and I can actually watch together, because I like the historical aspect of it. But it's like they have these Antiques Roadshows, like they show them like from 10 years ago, and like the value of whatever they said is always lower now. But anyway, it's pretty cool.
So they're not very good appraisers.
On Storage Wars, oh God, what's the guy's name? The guy who always wears the wife beaters. He has a son with him.
Oh, Jared. No. That's
no, it's not Jared's the one who's with Brandy.
No, he's the one that found all the Salvador Dali paintings, man. Wasn't it?
Was it Salvador Dali?
Yeah, it was like a ridiculous amount of paintings. Daryl was his name.
Yeah, I remember. He said he made like $200,000, $300,000.
It was a lot of money.
I just have a hard time believing that someone would leave Salvador Dali paintings in a storage locker. But maybe the person died. Maybe there's someone who doesn't realize what they are. He was a twisted dude right there, man. Like when I was in UConn, everyone had Salvador Dali paintings, posters on the wall. All right. Well, anyway, so XLK again big move lower, broke support. No sign of a rebound, at least as of yet. We basically were flat yesterday and down a teeny bit this morning. But this, to me, looks like it has room to go. I think this could get down to about here. So this would probably be simultaneous with S&P getting down to 420. But if we get down to there, then we start looking for a bounce. I mean, I just, with the interest rates soaring like they are up to 4.65 this morning, I don't see it. But I could be wrong. The market's never wrong. We just got to watch. But another reason why if we get a rebound, I don't think it would be that significant is because now we're below what's probably going to be resistance, this former support level. So even if it would not be uncommon to see us like rally, get to the resistance, and then go lower.
Yeah.
But no sign of a rebound yet this morning. Yeah, that Dolly, man, he was a twisted dude. I actually have a really nice frame, one of his pictures out of my garage. My wife wouldn't let me hang it in the house anywhere.
My daughter went to his museum when she took a couple of trips to Spain. She loves Salvador Dali's museum.
He used to make a cocktail that had opium oil in it, and he would drink it, and he would fall asleep, and then he would wake up and paint what he dreamt about. So, yeah, pretty twisted dude. I'm not really a visual art guy, but I do like Dali. I also like Van Gogh. I'll never forget when I was in high school, me and my mom went to see the Van Gogh exhibit down at the Metropolitan Museum of Art in New York. And you go in there and you go around the corner and there's the irises, like the first picture. And it just, again, I'm not really an art type of guy, but it just, wow, it just like awes you. The colors are so like vivid and bright. It was real. I mean, it was, that was what, 40 years ago. And I remember it like, wow, it was just so awesome.
Mark, do you remember the Freedom Train? And they used to take it around America with the spacesuit and all the stuff from in 1976. It was our 200th anniversary. The Freedom Train.
I don't.
Oh, okay.
I don't remember that.
Yeah, it was pretty neat. They came through Florida. We saw it. Anyway.
No, I don't remember.
Okay.
All right. So Apple looks again, right? Big move down, continues to go lower this morning. This has room to go as well. I mean, I think this could get all the way down to about here. I'm just looking into the past here, and I don't really see anything that looks like it's going to be significant. Maybe a little bit of support here, but I don't think you're going to get meaningful support until we get down to around here. And here's our descending triangle pattern. Notice how, if we get to a support level and you're wondering whether the support's going to break or not, my experience has been that if it's preceded by these lower highs, there's a good chance that it does, because the buyers are hanging out. The buyers are just like, yeah, whatever. They're just chill. Like if it gets to 175, I'll buy it. If not, I don't care. But you can tell the sellers are getting more aggressive. I mean, you got this big gap down there, but then you got the lower high, another really big aggressive selling here, another lower high. So investors or traders or investors, we don't really know, are just kind of, get me the hell out of Apple. I mean, this is some pretty strong selling here. Get big gap down there, big gap down there. All right, let's go look at Microsoft. You do remember the centennial, though, or the bicentennial, 1776, fairly well. All right, now, so let's talk about like what to watch today. Well, I would say this is a good thing to watch. If Microsoft breaks this support, that could probably be the catalyst for like another leg down in the market. This is the second biggest stock, and you can see, look where we found support. Literally right at the bottom, or the low trade from this day. So this was August 18th. So the low trade here was 311.55. And look at where we are, 311.85. Yesterday's close was 312.14. So again, we get to support and there's no kind of a bounce. A lot of times when you get to support, you get the buyers like trying to outbid each other, like we talked about before, and that starts the snowball effect. Well, that hasn't happened, even though we've been here now for the third day. So that could tell us that even though we're at support, the buyers are being kind of chill. They're not like stepping ahead of each other, which sets the stage for another move lower. All right, now we're going to go look at our financial sector. So there's 11 sectors. The three smallest are utilities, basic material, and real estate. So they don't really affect the market. They're all about 2.5% of the market weighting, whereas financials are about 15%. Tech is about 30% or 28%. But at different times, different sectors are in the lead. You got to just watch different things. All right, let's see here. All right, so financials, and we can see here we got our classic ascending triangle, where this is where you got your sellers are chill, but the buyers are getting more aggressive. But notice support turned into resistance, then it became support again. See that? You don't need to be a former hedge fund trader to see that.
Or a
I'll tell you,
market
man,
guru ninja.
former hedge fund traders like a dime a dozen these days. Let me tell you something. I know a lot of former hedge fund traders, and it's really not that big of a deal. So let's see. All right, so well, it looks like now that this support might have broken, and will this support become resistance again? And if so, we could get a move down here. Now, the second, just like we can watch the sectors to get an idea of what's going to happen in the S&P, we could look at the stocks that are within a sector to get an idea what's going to happen with the sector. So if we look at JP Morgan, which is the second biggest stock in the sector, it's sitting right on support. Well, maybe it's a couple bucks above it, but we got to watch this here. We do have the lower high, and then the biggest stock in the sector is Berkshire Hathaway, and this teaches a pretty good lesson here. Right, when a market is in rally mode, we get a lot of seller's remorse. I mean, that makes sense. Prices are going higher. People who sold are going to regret selling. So what happens if they sell and then the price goes higher? They tell themselves, oh, if I can buy my shares back at the same price I sold them at, I'm going to do so. So resistance ends up turning into support. People who sold here go to buy back here. People who sold here, buy back here, so forth and so on. You get this like staircase. People who sold here go to buy back over here. Now, this is the sign or a characteristic of a market coming to a top is the resistance here, which was pretty, I guess, what's the right word I'm looking for? I don't know. Important or so, I guess substantial. The resistance here, which was pretty substantial, did not, and also there, did not turn into support. So this shows that that dynamic or that characteristic of seller's remorse is petering out, or it's kind of fizzling out. So that's a characteristic of a market top when that stops happening. So if you're looking to, if you're thinking about, oh, is this market or this stock or whatever it is I'm watching coming towards the top, well, look to see if you get the staircase, right? Resistance becoming support. And once that resistance doesn't become support, that could be a sign that we're at the top. Energy is the only sector. Yeah, I don't know. Mr. Steven, you're right here from again. I was going to say it looks like natural gas is breaking out, and it looks like oil is breaking out. But strangely enough, we're not seeing, at least I'm not seeing, any inflation in the agricultural commodities. Like here's wheat, and you can see here, right? What was support has turned into resistance.
Q's just spiked the dollar. So did SPY.
They moved up.
Yeah.
I wonder if some news came out. But you see that here? What was support became is now resistance. And soybeans. Do they feed soybeans to cows?
I believe it's part of the feed, but I'm not sure. Steve would know that.
So,
Steve, you're out there, Steve.
all right, here's our soybeans. So I think the point I'm trying to make is that, um, yes, okay. Um, I mean, I guess that's why soybeans are so, I guess, important, right?
That and
It's not just
tofu.
because they're people are feeding their babies soy milk. It's because it's very important in the agricultural world. But anyway, you don't see any kind of a move up higher here. We could look at rice, really no kind of move up there. But again, we see our principles, right? What was support became resistance. And that's because same things that we see in pretty much any market. Like we see it in the stock market, but you get the same dynamics because it's people that are trading this. And what we're looking at is the emotions of people. You get traders who sold here who go to buy back here because they think they made a bad decision. You get traders who sold here who go to buy back here. Same thing with here. You get the fast moves, fast move up, fast move down, fast move up. We get these fast, if you get this like fast move up, it moves so quickly that there's just not a lot of time for there to be a lot of people who selling who become remorseful or trying to buy their contracts back. So a lot of times if you get a fast move and then after some consolidation you reverse and get back to those price levels, you get another fast move. Now, one of the main reasons why we get resistance is because you have remorseful buyers trying to sell. And just like when you rip higher, there's not a lot of time for there to be a lot of sell concentration. When you rip lower, it's the same that there's not enough time to be a lot of buy concentration. Like there's not a big group of buyers that are trying to get out. So then you get, when buyers finally come back into the market, you get the fast move right back through those price levels. So you can see that a lot. Fast move down, fast move up, fast move down, fast move up. Support becomes resistance. And it's because we're looking at the psychology. Now, oil could be on the verge of a pretty big breakout. Natural gas could be on the verge of a breakout. So eventually these moves are going to spill over into those agricultural commodities. And that I think is, there's a chance that that gives us like another big wave up in inflation. So you can see oil is at resistance. And if resistance breaks, as we know, when resistance breaks, things tend to make kind of rapid moves higher. Soybeans are as diversified as oil. Yeah, I like soybeans, actually. They're pretty good. All right, so that's oil. Let's see what we looked at Berkshire, we looked at JP Morgan. Let's look at our consumer discretionary sector. If you want to learn more about the sectors, right? SPY is a spider ETF. Spider stands for Standard and Poor's Depository Receipt, and they're run by State Street, big bank up there in Boston. I'm actually good friends with the guy who used to be their head trader. He's retired now. Good lucky dude. Um, but he was very, very smart. He made a lot of money. But anyway, you can just type in the symbol SPY and then SSGA for State Street Global Advisors, and you can get the fact sheet of the ETFs. So if we go down to holdings, these are our sector allocations. So tech is 28% or 27. Healthcare is the second biggest. So these guys down here, they don't really influence the broader market because they're so small. That's utilities, materials, and real estate. Energy, though, it's less than 5%, but energy is important. So this could influence the rest of the market. And sometimes consumer staples, you can, if money's flowing into consumer staples, it could be like a flight to safety, which is sometimes the last thing that happens before the market goes lower. But then you got your industrials, communication services. And if you look at these spiders family here, ETF Finder, they have ETFs for pretty much everything. These are all ETFs. So you can gold mini shares trust, whatever that is. world strategic factors. I mean, pretty much like anything. ESG, small cap value, dividends, momentum, internet, metals and mining. Metals and mining is a pretty popular one. That's XME. XME. So uranium prices have been really going through the roof.
I saw that.
Yeah, I think it's even that even your buddy there, John Kerry, said that we're going to have to use nuclear. So
Well, they should
maybe,
have been doing it for a long time.
yeah. Well, I think after 3 Mile Island, people got a little freaked out. But you're right, they should. So let's see. So some of these uranium stocks. What are some uranium stocks? I think UEC is one.
You know, I was watching, not to get off, I mean, well, we're on uranium topic, but I was watching a committee meeting yesterday, and they were saying that Iran has got uranium enriched to 87%. It only takes 90 to get to a nuclear weapon.
Oh yeah, I want to be. Well, thankfully, the Israelis will go in there and assassinate their scientists like
And I hate to
they've
wish
done
for something like
before.
that, but I really don't want them to have a nuclear bomb. Those people are a little whack, man. What they've done to the women that just want to live in their country. I mean, Iran used to be an awesome place, from what I understand, in the 50s. From what I've seen, documentaries and that kind of stuff. But now it's terrible. I wouldn't want to live under a regime like that.
Yeah. Well, I'll tell you, man. If you read the 9/11 report, it says that I forget the exact number, but it was like either 8 or 11 of the hijackers was in Iran the year before 9/11.
Yep.
So they were probably there getting some kind of training. So, instead of us making probably the biggest error in our country's history, invading Iraq, which God knows why we did that. Well, I think we do know.
Well, he did
why,
it
but
just to get back for trying to kill his daddy.
it was such a. I get so upset when I'm watching TV and they have those like Wounded Warrior commercials, and it's like these poor young guys, they lose their legs and they lose their arms. And it's like, for what? I mean, I'm perfectly okay with going into Afghanistan because that was where the Taliban was and they
Right.
reported 9/11. But like, do you really care if Saddam Hussein runs Iraq or not?
Well,
And is that like,
sorry.
do you go to like work in the morning worrying like, oh, gee, Saddam Hussein runs Iraq? It's like it's just so stupid. It's no wonder why people around the world hate America. I mean, because we do stupid things like that.
Well, we stick our nose in way too many people's business, and then when they don't agree with us, we drop a hammer on them. And it's not really the way that I think that it's supposed to be, but it's the way it's turned out to be.
I just, I mean, it's one thing to lose your life or to get hurt fighting for a just cause, fighting against the Nazis or fighting against the Al Qaeda, but I don't know. It just kind of.
I mean, just look
I'm,
at what.
I'm a pacifist at heart, and it just really kind of.
Yeah, no, I understand. Listen, I'm a soldier, and I don't want to see war happen. I don't believe in it at all. You train to not have to go to war, and you train to be the best, so people don't want to fight you. That's why you have a strong leader. You get in these positions like we are now. I mean, this like thing where they targeted Elon Musk. They're investigating Elon Musk up and down the road now because he bought Twitter and because he sends rockets into space and because he's trying to make America or not just humanity better. It's sad, man. It's just the whole thing sad.
Indeed, it is. But I like Elon Musk.
I do too.
All right, so here's our gold prices. This could be on the verge of a meaningful move lower because remember, when we get fast move up through price levels, if we reverse, there's a good chance we get the fast move back lower. So this could, I'm not saying it's going to crash, but let's just say it's at 1900. I think it could get down to about 1820 pretty quickly. And this gold chart really shows you this whole thing about how important knowing where these price levels are. Like, look where this resistance is. So this is August of 20. This is March of 22. And this is May of 23. And it was all like pretty much within a few dollars. 2085. I mean, look at that. How do you explain these perfectly precise levels when you have this worldwide big gold market? And the only way you can explain it is that, well, I'm looking at psychology of people that trade gold. And there are people who bought back here who said, oh man, I bought at the wrong time. If this ever gets back up to my price and I can get out of break even, I'm going to. Right? So what was support? What was resistance becomes resistance again. I think that when you look at the market, like, as you know, I don't like this whole, like, we're warrior traders or we're ninja traders.
Yeah.
I think the best way to look at the market is we're students of the market and we're studying psychology. And if you kind of get into that mindset, I think it makes it a lot easier to understand. If you don't look at these charts through the context of psychology, you'll just never be able to figure out what the hell is going on. I mean, how is it that gold has the same exact valuation now that it did back here? I mean, what happened yesterday that made the value of gold lose 1.5%?
Right.
You know what I mean? It's like, did they just find a new mine somewhere? Or,
well, and you would think if the stocks are going down that the gold's going to go up.
Yeah, that one would think, but sometimes things go against convention, right? Because it becomes what we like a crowded trade. Like, for example, with all the stuff that's going on over in Ukraine, one would think that wheat would be going up, but as it turns out, it's going down. So maybe in anticipation of what was going to happen, so many people got in that everyone who wanted to get in is in, and the market has effectively run out of buyers. So the only way it can go is down. As a matter of fact, we saw that.
Could that be what's happening in natural gas then too?
Well, I don't like, in what sense?
Like, as far as it being a crowded trade and people waiting, or is that why it's consolidating so hard at that little tiny level?
It could be, because there was, with all the talk about natural gas, one would have thought it would be going up, but it has finally started to break out. I mean, it could be on its way up. But this was an example of a crowded trade here, right? After the COVID thing hit and they started putting out all that money, everyone was like, all right, well, this is inflationary. So it's like everyone and their brother was buying gold in here, right? And then eventually what happens? Well, everyone who wants to buy finishes their buying, and then it just goes the other way. There's no other buyers left to push it higher. So people buy up here and then they're underwater. Finally, it gets back up and you get a bunch of remorseful buyers selling. That puts a top on it. And then the same thing happens here. So it's because of the psychology, right? Now, same thing could happen down here. You get this fast move up. Now maybe we get a fast move down. You can see here we got the fast move down. And when we got back to those levels, we got the fast move up. Yeah. Natural gas looks like it could finally be breaking out there, Mr. Steven. Natural gas.
There we go.
Yeah, see? And also too, this is a big gap up here. You tend to get gaps at two different places. You get them at the beginning of trends and you get them at the end of trends. The beginning of trends, like right here, you gap down. This is your aggressive selling, right? Here you gap up, aggressive buying. So beginning of the trend. This is a really big gap here. I mean, look, there's nothing that's even close to this.
Yeah.
If you look back, unless it's some kind of anomaly. Well, I guess we had some gaps back here, but you tend to see the gaps at the beginning of trends and at the end of trends. The beginning is the quote unquote smart money, and at the end is the people that just kind of waited, and finally they're like, oh, I'm sick of watching this, so I'm going to just finally go out and buy it. And they tend to be the last people in. But that's a pretty significant move. I would not be surprised if this has some follow through and ends up breaking $3 and moving ahead. But like I said before, I don't think I would get into it until we got above $3. And then look at how rapid. Look at this big fast move lower, right?
Yeah.
This theoretic. I mean, this could potentially make a relatively fast move and get back up to say $5. LNG.
Yeah.
Yeah, so this will follow along with natural gas, oil and gas pipelines. Maybe some resistance up here, but that's kind of a ways away. But like I said before, like if you're trading something like this, a commodities based stock, you got to kind of watch the commodity. So if natural gas, I'd be watching natural gas because if natural gas goes higher, that's going to be the sign that this goes higher. But I will say there is a pretty clear resistance level right here. I mean, that's pretty precise. This is the 167.50 level. Yesterday's high trade was 167.49. So I probably, yeah, I mean, it looks like natural gas is going to keep going higher. So, but again, I'd probably wait for it to break that $3 level. If it does, my guess would be that this breaks this resistance. So that's probably where I would consider jumping in.
This 1 minute
So,
chart on the spine cues is crazy. It went up $2, now it's down $3.
it's got to be true. It's probably because of what's going on in interest in the bond market.
Yeah.
So that's probably what's moving stocks. And like I always say, most of the time the news that they're talking about is not affecting the market. It's something else. But things that affect interest rates, yeah, see,
Yeah.
we're up to 4.68. Yeah, that's crazy. All right. If anyone has any more questions, fire away. If not, I'm going to get going.
Guys, thank you so much.
I guess I'll be here tomorrow morning, and then I got to go up to pick up my daughter at college, but I'm going to leave after class, so I'll be here tomorrow.
Awesome. All right, guys. Hey, the YouTube likes to have the comments, so if you don't mind, like, subscribe, share, and comment on the video after the stream. And thank you guys for coming today. We appreciate you very much. You just don't know how much. Have a lovely day.